Hello everyone. This is Jeff Plore, the ACPA. I'm the Managing Director of SP Tax, a Los Angeles-based tax firm that focuses on providing reliable and efficient tax services to individuals and businesses. Today we're starting off our Tax Prep 101 series, generally talking about some issues related to tax returns. And today's topic is primarily related to preparing your own taxes. The key highlight of it is 5 online tax software traps and how to avoid them. So there'll be some other information I'm going to provide as well, but the goal of today is to educate you on some of the issues I've seen both in preparing returns, consulting, and fixing returns that were prepared with online tax software, so that way you can be a more educated user. I'm not trying to persuade you one way or another whether or not to use online tax software. I accept that that's the future. And so let's get into it then. My lawyer forces me to read this. If you think it's wonderful, feel free to shoot me an email and I'll be more than happy to tell you where he lives, how he gets to work, his route, and you can be more than happy and you can show your love and appreciation of this language to him. That was a joke. I was only joking. But do keep in mind this presentation is intended to be a general discussion of some considerations to think about before preparing your own taxes, and is not an exhaustive study of all possible circumstances, iterations, or hypotheticals. It is believed to be accurate as of the date recorded, which is January 2nd, 2017, but tax laws are in a constant state of flux and may have changed. The presentation is not intended to be used as tax advice or create a client relationship, nor can it be used for the purpose of avoiding penalties. You are free to watch and share this presentation with appropriate attribution. All other rights are reserved, and the emergency exits are located on the fore and aft of the plane. In the event of water landing, the life vest is located underneath your seat. Please inflate your life vest before inflating others, and that's the end of the airline speech. Now we move on to the real topic. Going on to it. So about the series, like I said, this is the first part of a series on tax returns, tax preparation. Today we're going to talk about some things to think about before preparing your own taxes with online tax software, and then the 5 traps to watch out for. Then upcoming presentations will cover topics like how to find a tax preparer, what documents you should save for tax time and afterwards, payment options for IRS debts, how to deal with IRS notices, and if you have another topic you'd like covered, please do reach out to me and I will cover it. But going on to today's topic. So today I'll talk about some basic tax info, who needs to file, who I think should file, changes to refund timing that may affect you, especially if you're a lower income taxpayer, tax prep options, self-prep options, as well as professional options, who should self-prepare and who I think shouldn't self-prepare, and then we'll get into the 5 online traps and pitfalls. If you have any questions, and then at the end, I'll tell you how to get in touch with me if you have any questions about anything I covered today. So some basic information about our tax system. It's a pay-as-you-go system. Most people pay either at source, but through tax withholding. Some people will pay through estimated payments where they cut a check to the government or an online payment to the government every quarter or every month. It relies on voluntary filing and assessment. So you file a return that reports how much income you made and how much tax is owed. If what's owed is less than what was withheld or paid, then you'll get a refund. If the tax you were owed is more than the tax you owed is more than the tax paid, then you're going to need to pay or set up a payment plan with the IRS. I will cover this topic more in depth in a future video. So who needs to file? You're required to file if you made more than $400 in self-employment income. That would be if you're paid on a 1099. You could be claimed as a dependent and earned over $6,300 or made over $1,050 in unearned income. No one else could claim you or your spouse as a dependent, and you had gross income in excess of $10,350 if single, or $20,700 if married and you would have filed a joint return. It is different if you would be head of household or you were married and going to file a separate return. And then the big one that's going to trap a lot of people is if you received an advanced premium tax credit from the marketplace. So if you had health insurance through the marketplace this year and you paid anything less than full price for it, You most likely received an advance premium tax credit. You are required to file a tax return to reconcile it. Who do I think should file? If you had tax withheld from paychecks, investments, or made any estimated tax payments, so in essence, if anything got paid to the government on your behalf, you should be filing a tax return to at least get it back. Even if you are below the filing threshold, now that means is that you probably will get most or all of the withholding back, which is your money. Why would you give the money to Uncle Sam if you don't have to? If you don't live in one of the following states or had income from a state not listed, the states are Alaska, Florida, Nevada, South Dakota, Texas, and Wyoming. If you do not live in one of those states, you probably should file a tax return because chances are you live in a state with a state income tax or a state gross business tax. And most states tend to be fairly aggressive about pursuing those taxes. In particular, if you live in the state of California or have anything California related, they are particularly aggressive in sending out bills to taxpayers who hold professional licenses. I had one case where a retired doctor got a tax bill for $75,000 simply because he still had his medical license active in the state of California, and they sent him a bill. I had another one where they still had an EDD permit. That is, they still had their employment account active, and they got a bill from the state for taxes, even though they didn't have to file and they weren't in business anymore. So if you live in a state with state income tax, you really should file a tax return because their filing thresholds may be lower than the IRS's, and they tend to be fairly aggressive about enforcing filing requirements. If you have anything related to California, a mortgage, a license, a bank account, any sort of connection to California at all, you definitely want to file a tax return. Otherwise, one will be filed for you at the highest rate possible, and it will not be pleasant. If you're acting as a fiduciary for a family member, this would be if you have a family member who can't manage their own affairs, or you're acting as a fiduciary for whatever the reason. A fiduciary is a bit like being married. If something goes wrong, it is always your fault. So you always want to make sure that if you're a fiduciary for the family member, say a power of attorney, you want to make sure the tax returns are being filed for that person, because otherwise it could be a breach of your fiduciary duty. You want peace of mind, and I think this is really the most important thing here. If you don't file a return, then technically the IRS never is limited on when it can audit you. If you file a legitimate return, it starts the clock on when the IRS can audit you. It's generally about 3 years from the date the return was due or filed, whatever's later. But if you never file, you never start that clock, so you never really get peace of mind. And especially if you live in a state with a state income tax, if the state files a return for you, that can then trigger a return based on the state's numbers with the IRS. So you really don't want to trigger that. Changes to refund timing. I'm primarily highlighting this because I think it's one of the most critical things that's happened. If you received one of two what are called refundable credits, which is where they are congressional grace and you receive additional money on your taxes even though you didn't pay it in, the earned income credit or the additional child tax credit. Your entire refund, that means everything you are owed on a refund, will be held until February 15th, 2017 with no exceptions. So if you like to file early and get your refund, that won't be happening anymore. And in addition to this, the state of California has indicated that because of the new identity theft measures they've been required to take, refunds for the state of California from the state side will most likely be delayed as well. They were delayed in many cases last filing season, and I fully suspect they will be delayed this season as well. So if you're expecting return, if you don't base your financial planning on expecting a tax refund in an expeditious manner this year. Also, be wary of any offer promising an immediate or maximum refund, because these are often short-term loans that have high interest rates, fees, and costs. So you may end up losing so if you take one of these, you may end up losing a significant portion of your refund to a bank, basically. And you always want to make sure you read the terms in the fine print to make sure you know what you're getting yourself into. To see if you receive one of these credits, since I know a lot of you may not know whether you receive these credits, pull out your tax return from last year and look at line 66A and line 67. If one of those two was filled in and nothing much has changed, you will probably receive the credit this year. And you should plan that your refund will be held until February 15th at the earliest. I do expect that there will be additional delays past February 15th, simply because so many refunds are going to be held, as well as the identity theft issues, as well as the state side. So I do expect there's going to be additional delays. So your options for doing your taxes are broken down into one of two areas. You can either do it yourself or you can have someone else do it. If you do it yourself, there are paper forms which are free. They're perfectly fine. I learned how to do taxes on paper forms before eFile took over. You can do it yourself with electronic forms, which are basically fill in the paper forms on your computer screen. You fill them in, you press a button, it eFiles it for you for free. These two options are available to all taxpayers, regardless of income level, for free. You can do it yourself with online tax software. This could be free or it could cost money. I'm going to talk more about this later. On the other side of the equation, if you have someone else do it, there's a great IRS program that's underutilized called VITA. This offers free return preparation if you qualify. So if you make less than $54,000 a year and your taxes aren't particularly complex, you most likely qualify for this program, where it's an IRS-sponsored program where a certified volunteer will do your taxes for you for free. I personally think this is much more preferable than, from a dollar standpoint, it's much more preferable than paying a small fortune to a company to do your taxes for you. And I think it's a very reliable alternative that unfortunately is underutilized. So if you qualify for it, take advantage of it. And then the last option is to hire a qualified preparer, an enrolled agent CPA, or a tax attorney, depending on the circumstances. More on this in the next video in this series. But for today, we're primarily going to talk about the online tax software. So who should self-prepare? My colleagues are going to load my inbox with hate mail, but honestly, I'm not against people preparing their own taxes. That's why I'm doing this video. 5 online tax software traps to avoid. There's just some things you need to keep in mind. It's fine if you have a simple and straightforward return, or if you're fairly knowledgeable about relevant tax codes and or you can become knowledgeable about the relevant codes. There's not much more to be said there. If you're going to prepare your own taxes, you're going to prepare your own taxes. And that's just how it's going to be. Many of my colleagues don't like it, but that's their problem, not mine. However, if you qualify, I would strongly recommend that you look at the VITA program, because you'll have somebody else do your taxes for you who's trained to do them, and it won't cost you a dime. And then who do I think shouldn't self-prepare, or who should not self-prepare their returns? If you want peace of mind the return was done properly, that's really the biggest thing. You can do your own return, but if you do keep in mind that a qualified professional has taken continuing ed, qualifying ed exams, may have educational or other work experience requirements, and that provides, I think, more assurance that the return was done properly. So that's something to keep in mind. If you want peace of mind that the return was done properly, or someone to sue in the event the return wasn't done properly, have a professional do it. If you have any of the following: self-employed earnings of business or a farm, rental real estate, complex investments, you make a lot of money, or you have marketplace insurance issues, you probably should not be doing your own taxes. And I'll go through the reasons why for each of these now. It's not that I want to make money or that I want my colleagues to make money. It's that for the first reason, self-employed earnings of business or a farm, And the fourth reason, make a lot of money. Those two issues tend to be one of the most common audit triggers for the IRS. The IRS tends to audit more people who own businesses and people who make money. Why? Because people who own businesses and people who make money have money. And where there's money, there's often room for the IRS to come in and either find unreported income or find expenses that shouldn't have been claimed or expenses that they think shouldn't have been claimed. And keep in mind that the IRS person who audits the return is usually somebody who does not make very much money and is driving a beat up old car. So if you drive a nicer car or you have nice things, they're probably not going to like you from the get go. So do keep that in mind. So if you have one of those two, you probably may want to look at getting a preparer to do your return because you're at a higher risk of being audited naturally, even if you do the return 100% correct. Rental real estate and complex investments, we tend to see these are where I see the biggest issues with the online software is that it doesn't always handle the rental real estate properly, in particular the test to avoid being treated as a passive activity. And the IRS knows this, so the IRS may audit these a bit more. Complex investments, same thing. Plus, with these, there's tax planning opportunities you're missing out on. The same if you're self-employed or you own a business or a farm. There may be tax planning opportunities that a professional who specializes in those areas, like Moy, may be better suited for you. Now, if you have marketplace insurance issues, you may run into, this would be if you weren't able to get insurance or if you got insurance but it was late or you had some sort of lapse or multiple lapses in coverage, you may want to have a professional do the return. The software may be able to handle it, but it may not. You're going to want to check. If you use the software, you're going to want to check the software. So I guess this is going to become 6 online tax software traps. Do check the software, and if you have any concerns about how the software is handling it, do reach out to the support for the software. Now, moving straight along to the traps and pitfalls, which is now 6. A lot of people choose to prepare their own taxes with the online software. That's fine. I don't care. I'm not mentioning specific software in this video because it changes a lot, and I don't want anyone to think that I'm bashing one particular software company. These are just general observations I've seen from people who prepare their own returns on tax software that I really wish people knew about so that way they could keep an eye on. So some of the things to watch out for, the 5 that are the subject of this video, since I already gave you number 6, which is make sure that it can do the marketplace calculation correctly. The first one is what I call a bait and switch. A lot of the programs will advertise free filing, but it's not really free. It's free in quotation marks. What the most common one I see is it charges you for a state return. If you're in California, there's going to be a state return. So you're going to get charged. So it may be free for the federal return, but not free for the state return. Or it may charge you for filing because you don't qualify for the free edition. So for example, if you were paid on a 1099, you're not going to qualify for the free edition. I can tell you right now. I picked up a client last filing season, who was so fed up with getting the runner with this that he just called me and said, I don't care what it costs, just file the return. Because I'd rather have you do it since I know you than dicker with the software anymore. Additionally, this is what I saw when I was reviewing. Somebody brought me a return to look at that they had done on online software. You'll sometimes see it charge you for a particular means of payment or for a refund. So to get a refund sent by check or a refund sent to a debit card, you may see charges for this, convenience fees or charges. I think in his case I saw a convenience fee for a credit card and a convenience fee for an expedited refund. You don't need any of that garbage. So do keep these in mind. And I don't think the big criticism I have about the software is that it's not very transparent about these things. It's only buried into the fine print, and I think people should know up front, hey, this is what you're getting into. Like if you call my office and you ask us how much it's going to cost to do your return, one, we won't tell you over the phone. We can give you a range, but we won't tell you over the phone. And two, once you come in and sit down with us and we tell you what it is, that's what it's going to be. We don't play games. I don't need gimmicks to make money. Uh, I rely on my reputation as a CPA, as an enrolled agent, and my reputation with my local market. So this doesn't sit well with me. Maybe it's not as big an issue to many of you, but do keep that in mind that oftentimes when it says free filing, free is in quotation marks, and they're going to charge you for something, or they're going to take your information and use it for something. Also, keep an eye out on the disclosures. Going into that, it's not what you signed up for. Sometimes a lot of the websites that are advertising are actually affiliate sites, which means they're paid commission by the actual software website, or they may not be a legitimate software website. So if the website you start on or the website that's advertised is not where you end up, I would be really cautious there, and I would verify with the IRS on the IRS website of authorized e-file providers, authorized software, that the software you're using is actually accurate, and then verify that it's on a secure connection. Since there is a prevalence of identity theft, I wouldn't be surprised if many of the ads out there are not legitimate. Moving right along, confusing interfaces or questions. This is a common one I see usually when I'm defending returns. Don't be afraid to call support. If the software is going to charge you money, they should at least provide you with some support on how to use it. And many of the most popular ones do. They have excellent support staff. If you don't understand something, call support. Don't be afraid to call them. That's what they're there for. They're there to help you. And if you still don't understand what they're saying, then you're going to have to make a serious decision about whether or not you may need to hire a professional. Also, don't rely too much on the wizards of the questionnaires. Many times they can be misleading or inaccurate. I know a few years ago on one popular software package, there was an issue where if you were a college student, it was not allowing you to take, if you were a college student who lived away from your family and could be considered independent, the software did not seem to recognize that. There's also similar scenarios with that. Usually the questionnaires and the wizards are based on common taxpayer issues. So if you have an uncommon issue or you're not within the parameters they designed it for, you may get led down the wrong path. As a key tip, I would suggest you keep a record. When you call support, keep a record of who you speak to and when and what they say. If you can figure out whether, I'd also suggest keeping their title as well, since in some cases the title indicates whether they're licensed or unlicensed. But keep a contemporaneous record, who you spoke to, when you spoke to them, and what they said, as well as the issue you were calling about. And you're going to want to keep this with your supporting documentation for your return. This can help you prepare down the road if you're audited and there's an issue and the IRS tries to assess penalties, because it can go to show reasonable cause for abatement, that you had done due diligence to try to research the issue more fully. Similarly, if you run into any confusing questions, make sure you're documenting that at the time you run into the question and how you're researching and resolving the issue. So if you run into a question you don't understand, make sure to write that down and then write down how you researched it. For example, if you look at the help base or if you call support. And if you're still having issues, then you really should look at calling a professional and having a professional assist you at that point. Another one is don't estimate. Don't make up numbers. Don't estimate. If you can't back it up, don't claim it. So a lot of people get lazy and they just come up with estimates. And I know some of the software packages say, oh, just estimate it. Don't estimate it. There's some things you don't estimate. Especially if it's business expenses, charitable contributions, medical expenses. If you can't back up what you're putting on the return, don't put it on the return. don't estimate, because if you come to me later on down the road and I see $5,000 under charitable contributions, but you can only show receipts for $500, you're only going to be able to claim $500, and there's going to be a massive bill, and you'll probably get a penalty. So don't make things up. Don't estimate. Really don't estimate. Go based off the numbers you have, just like how I can't estimate. I have to go I have to go off the documents you give me, um, or off the numbers. I have to go off the documents and numbers you give me. So don't estimate here, especially if you are self-employed, you own a business, or you make a lot of money, because at that point, auditing, when you're going to get audited, is more a matter of when, not a matter of if. Um, Moving along, doesn't show actual return or is pay to play. Um, some packages will force you to pay to see the actual return, and I don't mean a summary, I mean the actual return that's going to get filed. Um, don't use software that won't show you the actual return. The summary is no good. Similarly, if software won't provide you with the actual return, don't use it. The summary is no good. You're ultimately responsible for your own return, and when people want to see the return, they want to see the return, not a summary of the return. So if you're paying for a return, get the return, and be wary of any software that forces you to pay to see the return. And do check the return before you hit file, because once it's filed, you are responsible for that return. And the software company is not going to help you if there was an issue with it, since their interests are to eliminate their responsibility for it. Moving right along to the last of the 5 traps and pitfalls, one I think is actually significant. If there's a guarantee offered, you're going to want to read the fine print. Most guarantees are only going to cover explaining how the return was prepared. However, if you're high net worth, you're self-employed, or you're a small business owner, you're already at a high audit risk. So you can do the return 100% correct and still get audited just because you made money. I know it's unfair, but welcome to life. Most of life is unfair. And in this case, if you get audited, usually they're not interested in how the return was prepared. They're interested in the numbers on the return and fighting the numbers on the return. So the IRS already knows how the return was prepared. It was prepared in TurboTax. You entered numbers using a questionnaire provided by the software. But what they would really like to know is where the numbers that got entered into the software came from. And what you usually need in those cases is for an expert to aggressively defend the numbers on the tax return, or defend as much as is defensible. And many times, the scope of services you get under one of these guarantees that you pay $20, $30, or $40 for is really limited. And all they'll do is write a letter on your behalf saying, here's how the return was prepared. And the limitation can be a specific service, or it can even be a specific dollar amount. And the problem with this is, if it's a specific dollar amount, the cost of a proper defense can range between $2,500 to $25,000. And that's not even going to court. So you want to make sure you understand what you're paying for, because it may not make sense for you to pay $20, $30, $40 for something that actually is worthless to you. Because remember, you're ultimately responsible for your return, not the software. And the software company is not incentivized to help you. So do read the fine print on these things. So that pretty much ends the pitfalls. I hope that was relatively helpful and clear. If you have any questions at all, please, if it's a general question about the topic, go ahead and leave it in the comments below, or you can always contact us directly. If you have a topic you'd like us to cover in a video, feel free to contact us. If you have a more specific question, go ahead and email us or call us, because so that way we can give you a more accurate answer if we can. My email's there, jeff@sbtax.net. My office is 818-945-1040. Like I said, if you have any questions, leave them below. Otherwise, make it a great day.